heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up on the show, the latest on Arm and Qualcomm after a key tech license deal is cancelled. And why some analysts predict a tough road ahead for Tesla ahead of its earnings report. Plus, we're live at B20 in Sao Paulo with a conversation with Google Brazil's president, Fábio Coelho. Let's get to our top story. Shares of chipmaker Qualcomm and chip design firm Arm are both lower this morning. Bloomberg reporting that Arm cancelled a license issued to its longtime partner Qualcomm, potentially leaving the leader in Android smartphone processors without key intellectual property to design chips. The showdown could hit the finances of both companies and comes ahead of a breach of contract trial in December. That dispute centers around an acquisition Qualcomm made of another chip firm that was already licensing Arm designs, and those blueprints then passing on to Qualcomm. Bloomberg Intelligence senior chip analyst Kunjan Sabani has published his React research with colleagues in response to that license cancellation and joins us on set in San Francisco. Let's start with your reaction. The news was significant overnight. Investors do not like it clearly. The timing is a surprise. What do you make of it?
I mean, the timing of the notice for the December 16 trial, which is almost 2 months away, this doesn't seem like a coincidence to us. This seems as a pressure tactic for Arm on Qualcomm to bring this to a settlement before even the trial begins.
This is a technology story. And historically, Qualcomm has used Arm designs for its chips until this week, when it announced its latest generation processors, which relate to that acquisition. It's a company called Nuvia. I spoke to the Qualcomm CEO, Cristiano Amon, yesterday, prior to this news coming out. You're aware of that. Let's just very quickly listen to what he said about the company's technology strategy.
So we went from phones to cars to the PCs and now industrial. And that has been part of a strategy. We did all organically with some of the small acquisitions. We feel we have a very competitive roadmap, and we're thinking about the new. What is the new innovation that is coming for those markets?
The acquisition he's referencing there was Nuvia. Just explain the basics of that deal and now why the timing of this piece of news is so significant.
So Nuvia designs were based on ARM architecture, and they had a license with ARM. When Qualcomm acquired Nuvia, ARM issue was that the license was on a much lower rate than what it had with Qualcomm. Now, Qualcomm did reiterate and build on top of the Nuvia architecture, which they are now calling sort of their own designs. So the issue here is that the license agreement based on which the Orion chips were built on were at a much lower rate, and ARM is demanding a higher rate comparable to what Qualcomm is paying on its ARM-based designs.
This is a complicated story, and it's complicated for analysts like you covering. This is what Qualcomm had to say in response to the Bloomberg reporting, and it's fighting talk, as you'd imagine. This is more of the same from Arm, more unfounded threats designed to strong-arm a long-time partner, interfere with our performance-leading CPUs, and increase royalty rates regardless of the broad rights under our architecture license. They go on to say other things. I think the main point is we are headed to trial in December. On the royalty rates piece, how do you see this playing out? Arm does not want to lose money with Qualcomm going with different designs, right? Qualcomm is the most important smartphone processor maker when it comes to the Android platform. There's quite a lot at stake here.
Definitely. For ARM, Qualcomm, its number one customers with about $320 million in revenues last year. So it does not definitely want the number one customer to go away. But we don't think that a litigation where blocking Qualcomm's ability to ship chips based on with the ARM agreement is more likely, because it does not just impact Qualcomm, but it impacts the entire industry. I mean, imagine a scenario where phone makers cannot get Qualcomm chips, and which they are getting ready for the next generation of AI smartphones.
I should add that Arm declined to comment on the reporting. That was Kunjan Sabani of Bloomberg Intelligence with the analysis, and later in the show, we'll go deeper on that Bloomberg reporting on the story. Let's talk a bit about markets and then the investor attitude toward the chip sector. Hilary Frisch, Senior Research Analyst for Software, Services and Enterprise Tech at ClearBridge, joins us. And it's so interesting because there's a lot of noise and single name specific noise, but actually those headwinds are offset by massive tailwinds for the chip sector, largely related to the enterprise investment in AI infrastructure, Hilary.
Yes, they absolutely are, Ed. I agree with you 100%. Where
are you focusing? Go ahead, please, continue.
Yeah, we're seeing growing demand indications for demand for cloud migrations, demand for AI, more AI projects going into production. There's a lot of debate around that, but all in all, there's more activity now than there was 6 months ago. There's more likely to go into production in the first half of the year than second half of this year. So those wheels are really starting to move.
Where I would like to talk about Qualcomm with you is this debate about how we as consumers will use AI. To Qualcomm's mind, it is on device. Of course it is. That's their entire business, right? But they see a world where within 5 years, all of us having an AI smartphone. When you look at the markets and you look at the names across the technology sector, is that a part of your thesis and your investment approach, that idea that we're on device sooner rather than later?
I think the requirements for efficiency in processing GenAI will require that processing occur everywhere, including on the device. There's clearly going to be a tremendous amount of centralized processing at the hyperscalers themselves, at ancillary clouds, with larger and smaller models, and there's going to be a diversity within the ecosystem, but absolutely the device is part of the thesis.
There are interesting parts of the enterprise software space as well, where everyone is sticking the letters A and I in front of existing product. Are you finding it possible to discern what is tangibly good, new, impressive, and what is just marketing?
It's such a good question, Ed. There is a tremendous amount of marketing speak, FUD, hopes, dreams, and promises. But at the end of the day, what is interesting about this cycle versus prior cycles, first and foremost, is just how quickly incumbents have moved to embrace GenAI, to incorporate it into their product lines. Some key incumbents like Microsoft and Salesforce have pivoted their entire organizations around GenAI. They've re-architected their R&D efforts around it, seemingly overnight, let's call it within a year or a little less, and even longer for Microsoft. But at the end of the day, there's a tremendous amount of activity. The incumbents, actually, there's a lot of debate over who will win, who will lose. There's a lot of investor focus on the potential disintermediation of incumbents. But they bring a lot to bear this time around, not just the data, not just the workflows, not just the customer trust, not just that whole end of it, but GenAI at the end of the day isn't just about building a bot or an app or an interface. It's about the complexity of the back end and that entire orchestration, the provisioning, the identities, and all the things that go along with it, which is very hard to do. So that's the key of part of what I'm looking for. Who can handle the entirety of the complexity of what looks very simple on the front end of, say, an agent, and how they will succeed in that. And we're gauging that process as we go. But so far, the early indications are fairly promising.
And how they handle it. Let's end the conversation by asking what happens next. Across the field of software enterprise and the hardware names you cover, how primed are we for more M&A and more consolidation?
It looks as though we're primed for more M&A and consolidation going forward. That would have been the natural inclination to start with. We've had a sluggish spending environment, most certainly for a variety of reasons. I think the elections have been part of that. There are a lot of factors that are part of that, including a wholesale focus on GenAI by corporations. But going forward, there's better spending indications. We're going to see both potential new candidates look likely to permit more in the way of M&A. There's going to be more imperative to do that. You're seeing more private equity activity, and you're seeing the low end of valuations, call it the IBMs, the SAPs, the Oracles, come up, providing a floor. So I think all of that and hopefully declining interest rates will precipitate a more active M&A environment going forward.
Hilary Frisch, Senior Research Analyst for Software Services and Enterprise Technology at ClearBridge. Thank you very much. Now, coming up here on the show, Tesla set to announce earnings in just a few hours' time. We're going to preview what to expect. That's next. This is Bloomberg Technology. Apple CEO Tim Cook makes a visit to Beijing, meeting with China's tech czar with a promise to keep investing in the country. Bloomberg's chief correspondent for Apple and consumer electronics, Mark Gurman, with us now. And you and I have talked so much about the supply chain in China and China as an end market, but it is notable that he goes in person and has this very public meeting. What do we know, Mark?
Yeah, so around this time every year, Apple executives make a trek down to Asia. Greg Joswiak, right now, their head of marketing, is in Southeast Asia. Tim Cook and Jeff Williams, Cook being the CEO and Williams being the COO, are now in mainland China. And Cook typically goes to China 2 to 4 times per year. Other than during the pandemic years, he was there quite often. There's a lot at stake for Apple in China, right? They need to meet with their big providers and partners there. China Mobile, he had a meeting with them. They pledged continued cooperation. Cook pledged continued cooperation with the IT minister of China. Of course, he's not going to go there, meet with the IT minister and say, we're no longer going to cooperate in our second or third biggest market, right? So that's kind of obvious. So this is just how things go when you are a multinational company as big as Apple. You have to meet with your partners and government regulators in the countries that you work with and work in. And these meetings are a big part of that. Obviously, Apple's unique as a US-based tech company to have such freedoms in China. They have around 40 retail stores there. For the most part, almost all of their services operate there. There are some nuances regarding cloud storage for iCloud. Obviously, Apple Intelligence is not available there yet. So these are things they're going to continue to work on, and keeping in touch and meeting with that government is important, not to mention the necessary meetings that Cook and Williams, obviously Williams runs the supply chain, need to have with Foxconn and other supply chain partners locally.
Mark, Apple shares down around a percentage point in the session. There's reports out there this morning that Apple's scaling back production of the Vision Pro. What do we know about that, and what do you make of it?
I think it's a bit of a misnomer, right? It's not that they're scaling back production of the Vision Pro because they're planning on canceling it or getting rid of it. Before Apple releases new versions of products, they need to scale back production of the current product. And the goal is to have enough units to fulfill demand and fill the channels until the new ones are ready. And there is a new version of the Vision Pro coming out in early 2026, I'm told. That's a second generation version with a faster processor and a focus on artificial intelligence. At the end of 2025, they're going to unveil a cheaper model of the Vision Pro, reduce the specifications, try to get the price point down by about $1,500 to $1,800. And so you need to scale back production ahead of time so you don't have over inventory when those new models come out. Now, the nuance and the interesting part here is that Apple believes it's going to take a year for them to run out of existing supply of the Vision Pro, which makes sense given that the pace that this thing is selling at. But I've seen no indication of any abandonment of the Vision Pro line. In fact, what I'm seeing is increased hiring for the Vision Pro. I'm seeing increased investment, and I'm seeing increased optimism about the future of the product now that they're sort of getting a new roadmap together of different types of devices within that family.
Bloomberg's Mark Gurman on all things Apple. Thank you very much. Another thing we're tracking is Tesla, set to report earnings after the closing bell today. What do we expect? Let's go out to Bloomberg's Craig Trudell in London, who leads our global autos coverage. And this is an important print and an important call. Where do you want to start? There is a long list of things that investors, Tesla fans and Tesla owners will want to know about.
Yeah, I think deliveries-wise going in, we know that they were up a little bit for the quarter. I think the question is going to be sort of how they pull that off, right? And to what extent were they able to keep pricing firm? I think the expectation generally is that earnings may actually dip a bit in terms of, because of the fact that this is a company that is still highly reliant on the Model 3 and Model Y. and those products are a bit tired and in need of some upgrades. And we didn't really see the Model Y, the Model 3 refresh really sort of move the needle. I would be interested in, of course, whether Musk has anything to say about a Model Y refresh.
Right.
He's sort of ruled out that anything is coming before the end of this year. But that, I think, is something everybody's expecting, being a part of these more affordable models that the company has teased coming in the first half of 2025.
The timing of the earnings report and call is so interesting because it comes so quickly after We Robot, the robo-taxi event, and it feels like they left a lot out there, or a lot that they didn't put out there, right? Investors wanted to know about a proprietary ride-hailing app. Do you think Musk is going to talk about that on the call, Craig?
I would be surprised, just because it feels to me like, even some of the timelines that Musk put out there at the event were a good ways off. And we know that, as he himself acknowledges, he tends to be overly optimistic about these timelines. And so that still feels like a business that we're not going to see anytime soon. And so it would maybe be premature to get into on the call. I think another sort of topic that I would be surprised if it didn't come up was some discussion of Musk's involvement in politics and
yes,
the company, to its credit, solicits retail investor questions. I would be shocked if we didn't have something come up along those lines. We've heard Musk address this in the past.
For now, Tesla is still in the business of selling electric vehicles to consumers. What does the environment and other reports and earnings tell us about how that's going around the world?
I think so many manufacturers are really pivoting to, hybrids, right? And plug-in hybrids, range extended electric vehicles. I think Tesla, sort of went out of its way a couple quarters ago to say, to highlight that fact and say that it was their belief that this is the wrong strategy. I think you have to sort of, look at what has happened at some of Tesla's biggest competitors and question whether they were really correct, because we've seen much more robust demand for hybrids, whether they plug in or not. Toyota, for instance, is just really kind of lighting the world on fire with its hybrid business. And so, Tesla, I think, is struggling with some of these broader trends that the industry is seeing of slowdown for battery electric vehicle demand.
Bloomberg's Craig Trudell in London. Thank you so much. Now, coming up on the show, Asana just released its latest AI workflow tools. Paige Costello, company's head of AI, joins us next. This is Bloomberg Technology. Enterprise work management platform Asana just wrapped its Work Innovation Summit, where it announced new AI features that will do things like project coordination and workforce orchestration. Teams will also be able to embed the new features without using code. Here with more is Paige Costello. She's the head of AI at Asana, and there's such pressure right now to ship new products, almost like on a weekly cadence. It was a big week for you. Let's start with the without code bit. Why is that significant?
This is important because leaders and team leads know that the most important work is across teams, and they need to be empowered to set up AI to work in their existing workflows, across their existing work tools. No one wants more places to work. No one wants to remember when to engage with AI or not. And this enables people to actually set up AI directly where they're already working.
What you just said, whether to engage or not, how to engage. Do you have any sort of early case studies or examples of how customers are actually using it and whether or not they're benefiting in a sort of easy to understand way?
Yeah, one of the customers in the beta that is now available today was Clear Channel Outdoor, and they're a multinational advertiser. They use these AI workflows to effectively empower their creative production teams. And so when sales would send requests to creative teams, picture 2,500 requests a month. These requests were, with before and after, saved 60% of manual time and 15 hours per request. And that's just one part of these smart workflows.
in any company, particularly in an enterprise software company, right, there is a role that an AI agent can play. If you work at any tech company, you often have like in-house software where there would be a very clear and useful use case for an AI agent. But I think loads of people that watch the show, they don't really know what an AI agent is. Could you define it for us?
Yes, an AI agent is effectively using generative AI or LLM models to make a choice, effectively, tool use and reasoning about what the proper next steps are. Now, importantly, enterprise organizations care about accuracy, reliability, and ultimately auditability, and that's where this solution is very unique because it sits on top of the existing scaffolding of work structure in Asana, which is all about transparency around who's doing what by when and why, which you care about when AI is doing work as well.
Mark Benioff, who is the CEO of Salesforce, which is a very large enterprise or SaaS company, has been talking a lot about what an AI agent is or is not, particularly in his critique of Microsoft's Copilot. But there is clearly a tension on it. Why is it important that people start to understand and think about whether they use or need an AI agent at all?
I think the biggest unlock is what it is able to, where it is able to have creativity. And what's important is that organizations decide the length of leash they're willing to give AI. What's important here is delegating slices of work to AI and having a perspective about what you want it to do and what you don't want it to do. Ultimately, people are accountable for work, the decisions, the results. And when you deploy an AI agent, you want to know what it did and why. And honestly, you want the ability to undo it.
Paige, we just have 30 seconds. Why is Asana good at AI agents?
Asana has a unique advantage with the structure of its data, and it works across apps with the tools that teams use today. What's unique about the AI agents that Asana deploys for our customers is, one, they're highly customizable, two, they're right in the context of apps, and three, they are exactly tailored to your team so that no one needs to make a choice about what to use and when. It just engages proactively on your behalf to reduce busy work and actually help execute some of the work right in context.
Paige Costello, head of AI at Asana, thanks for being here back on Bloomberg Technology. Now, coming up on the show, we're going to go back to our top story and have more on the fallout from Arm's decision to scrap a major licensing deal with Qualcomm. We'll go out to London, speak to Tom Giles, who leads our global technology coverage. That's coming up next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. The technology story in financial markets is tech dragging us down at the index level. Look at the NASDAQ 100, for example, kind of down a percentage point or more than a percentage point. It is some of the chip names that are most pronounced in their declines, but others are also lower ahead of earnings. For example, Tesla, that's after the bell. The stock's down 0.8%. You know what our top story is today. Let's get right to it. Qualcomm, the chip maker, and Arm, the chip design firm, are both markedly lower. Bloomberg is reporting that Arm has cancelled a license issued to Qualcomm for key intellectual property for smartphone processor designs. It's an escalation of an existing dispute, which is headed for a trial in December. Bucking the trend in that space, though, just really quickly, is TSMC. Overnight, we got news that TSMC has cut loose a client it found out was funneling chips to Huawei, which, of course, is a Chinese company subject to sanctions. Let's get back to that Qualcomm and Arm story and bring in Bloomberg's senior executive editor, Tom Giles, who's out in London this week. Tom, this is so complex, the Qualcomm Arm story. The timing is astonishing, frankly. Rene Haas was in the building with you this week. Cristiano Amon was on the show with me less than 24 hours ago. As far as you can, just explain the basics of what we've reported overnight. I think that's a good place to start.
Well, there's a dispute between these two companies. Qualcomm, one of the biggest chip makers, particularly when it comes to mobile phones. Arm is this company, this UK-based company that owns the basically the designs for these chips. if you if you can't use the design, you can't make the chips. If you don't have, basically, if ARM decides to pull that design away from it, the license to use the design, Qualcomm is going to be inhibited from making a big swath of the chips that it needs to make those mobile phones. This is a legal dispute between the two over an acquisition Qualcomm made. It's not getting resolved. It's going to trial, and this ratchets up the pressure. This doesn't mean that they're going to absolutely pull those licenses. They have 60 days to resolve it, but on the eve of this trial, this is an instance of ARM really ratcheting up the pressure and saying, you need to take these allegations of intellectual property infringement seriously.
Yes. Some of the analysts use words like leverage, and we'll speak to one of those analysts in just a moment. You lead the team. I mean, this broke last night after a few days where both names were in the news. You know, what else can you kind of tell me about our reporting and just the kind of timeline now running up to that trial in December?
Yeah, I mean, this comes at a time when there is tremendous interest in the chip sector. As you know, it's against a backdrop of escalating U.S.-China tension, concerns about where these chips are ending up, concerns about making sure that the U.S. has control over the full supply chain. You have, at the same time, you have these chip stocks rallying, going through the roof because of the expectations for demand for artificial intelligence. You mentioned in the introduction that TSMC is bucking the trend. They are a company that is really benefiting from the AI boom. All of these things are coming this is the backdrop. For Qualcomm in particular, remember that they are the main maker of mobile chips. Apple's a big customer, and there's questions about a demand for the iPhone 16. How robust is that demand, and will that hurt Qualcomm? There are definite questions about whether the iPhone 16 is a game changer of a phone. All of these things happening in the background. Add to that tension between ARM and Qualcomm, one of its biggest customers, and it's a recipe for a bit of turmoil in the chip market right now. And don't forget, this isn't something that's just going to hurt Qualcomm. This could hurt ARM as well, because if you're not going to sell the licenses to these chips, that hurts them too. It's a risk. It's a big risk that they're taking. My sense is, I mean, they're not saying it this way, but my sense is that this is really aimed at putting extra pressure on Qualcomm on the eve of this trial to maybe work out some kind of a settlement, maybe work out some kind of agreement that works to ARM's advantage.
Right. And to point out, as we just showed, ARM shares are more significantly lower than Qualcomm's are. Bloomberg's Tom Giles in London, thank you very much. I want to go to Stacy Rascom. He's senior analyst at Bernstein Research, covering US semiconductors and semiconductor capital equipment. And in your note, which was in reaction to that Bloomberg report, I think you make the same argument that Tom just outlined. This was an action taken by ARM, to your mind, to force some kind of pre-trial settlement. Please take that and run with it, Stacy.
Yeah, it feels that way. So it's a 60-day, supposedly, timeline. Assuming they did this yesterday, the 60-day limit would be December 21st. The trial right now is scheduled for December 16th through December 20th, so it's kind of right on top of that. Yeah, to me, this feels like an attempt to drive a settlement from Qualcomm on the eve of the trial. It feels like they're ramping up the negotiations pretty hard there. So yes.
Stacy, on Monday night, Qualcomm unveiled Snapdragon 8 Elite, which is based on the Nuvia acquisition, right? Based on Nuvia designs. Less than 24 hours ago, Cristiano Amon came on the show with me to discuss it. Last night, Bloomberg broke this story about ARM cancelling the license as part of this dispute. Coincidence, or what do you make of the chronology?
Probably not, right? I mean, and they look like good parts, right? So I mean, like the general thrust of this dispute, as I understand it, again, I will caveat, I'm not a lawyer, and like I won't be on the jury either, but Qualcomm bought this company, Nuvia. Nuvia was an ARM server startup, but what it really was, it was a bunch of ex-Apple guys. It was the Apple M1 design team that designed Apple's first custom chip. Qualcomm bought them to get that expertise, and they're going to be delivering products across their portfolio using that expertise. Qualcomm's current products are made on something called a technology license from, that's like the off-the-shelf ARM stuff. Moving to an architectural license where Qualcomm does the custom chips, the royalty rates tend to be lower. Nuvia's rates were actually higher. So what ARM, I think, really wants is for Qualcomm to apply Nuvia's higher rates like through the portfolio, because otherwise the rates would come down. And when Qualcomm, and to enable that, ARM decided not to approve the license transfer of Nuvia to Qualcomm. Qualcomm's response, and I'll be honest, I have a certain degree of sympathy for it, although I guess I'm not a lawyer. Their response is effectively like, what are you talking about? We have our own architectural license. It covers the exact same IP and technology. Take a hike, right? And that seems to be where this is. I think ARM is potentially worried that rates could go lower if Qualcomm makes a transition from technology license to architectural license. I think if Qualcomm were to agree to what ARM is wanting, then the rates would go higher, and hopefully they'll settle out somewhere in the middle. Like, I don't know, I can't imagine that it's good for either of them to actually take this in front of a jury. Jury trials are a bit of a crapshoot under the best of circumstances. So
Stacey,
I want to take this over the next 60 days.
Allow me to take this opportunity just to point out that ARM did not comment on the Bloomberg report, but Qualcomm did. Qualcomm did. So let's just show what Qualcomm had to say, or at least some of it. And, it's kind of fighting talk, right? It's them saying that, it's trying to strong-arm a long-time partner. And this is the bit I want to talk to you about. Interfere with our performance-leading CPUs, and then we can get to the royalty rates bit. Yeah. Qualcomm is not the same company today that it was when I moved to California 6 years ago. It's tried to diversify its business, and the Nuvia acquisition and its sort of change of what the technology offers of the smartphones core to that. Could you just speak about how you view Qualcomm and its place in this smartphone market for Android?
Yeah, no, so they're pretty dominant. They own the whole flagship space, particularly the flagships in smartphones where the ASPs are higher. They've also been, the whole space has been making this push toward AI smartphones, and we can argue, do people want AI smartphones? Does it drive an upgrade cycle? But increasingly, when people go out to buy smartphones, they're going to buy AI smartphones because that's what's going to be for sale. And the content, I think, is materially higher in some of those phones versus phones without the AI functionality. And that's a big area where like some of the Nuvia architectural expertise is coming in terms of performance and everything else. We saw some of the benchmarks from some of the new stuff that they announced earlier this week in Hawaii. Like the parts look really good.
Right.
But that's kind of what's, and by the way, they're not just isolating Nuvia though to smartphones. Clearly, they've already launched PC chips.
AI
and they're going to be rolling that across the rest of their increasingly diversified portfolio, auto and IoT and like everything else. Yeah.
And I just point out as we let you go, Stacey, that ARM shares are actually lower than Qualcomm shares in this whole situation this morning. Great to have you back on Bloomberg Technology. Stacey Rasgon, Senior Analyst at Bernstein Research. Thank you very much. All right, coming back up on the show, Wayve CEO and co-founder Alex Kendall. We're going to talk about a UK company making moves in autonomous driving. That's coming up next. Stay with us. This is Bloomberg Technology. Okay, automotive AI maker Wayve is making its way to Silicon Valley. The London-based startup's expanding its road testing and opening a new office in Sunnyvale, California. Alex Kendall is the Wayve co-founder and CEO and joins us now from the UK. And what's so interesting about Wayve is no focus on the hardware, no focus on the cars, just the foundation model, the robotic brain that helps a car learn how to drive itself. Let's start by asking why you felt you needed to bring your testing to California, to the streets of San Francisco.
Hey, well, we're excited to bring a fresh approach to the US market. I think in general, being able to operate an AI and be able to test it in such a diverse market as the US is going to be awesome for us. We really want to push the boundaries of generalization. The neat thing about this approach is that it can allow all ranges of automation, from driver assistance up to full autonomy, with different types of vehicles and different driving environments with different cultures. And look, we're now training from data from over 15 countries, but to be able to actually have a testing fleet on the ground and show that our AI can generalize and drive in a new environment like the US and California, this is a really exciting moment for our business.
Alex, set out the pathway from here. You're going to start with basically level 2 plus kind of ADAS functionality, so you don't need a DMV permit. But what are the next stages? How will you expand the testing, and what's your ultimate goal for the California market?
Yeah, well, fundamentally, Wayve's building an embodied AI. This is an AI that brings it out of the internet and into the physical world to be able to drive and operate vehicles. And this is an AI that can understand the physical world, can drive with different types of sensors. And what's really exciting for us is that while we want to deploy it in a range of automotive products, the latest vehicles that are being produced by the industry have GPUs, surround cameras, and radar sensors, and are actually the perfect deployment environment to reap the benefits of this AI.
Right.
So the fresh model we want to bring is a software model where we can see this AI deployed in vehicles, deployed as driver assistance, and use that experience and exposure to improve the quality of the system over time, and ultimately bring us to this autonomous future we all dream of.
You've raised more than $1 billion from the likes of SoftBank, Nvidia, Uber recently topped up the round. How quickly are you burning through that, and where's the money going?
Yeah, look, we've been a fairly disciplined company for the last 7 years. 7 years ago, we had the thesis of going all in on an end-to-end AI approach for autonomous driving. And it's something that we've been building out and pioneering some really interesting approaches that allow us to be more data efficient, to learn from simulation and generative AI. And so while we're seeing a lot of expansion and growth in the amount of data we're training on, we want to continue to make a lean and cost-effective solution possible to come to market. And of course, the partners that we've got in the US that also make this really interesting for us to be able to operate in the same market closer to our partners like Uber, Nvidia, and Microsoft that have been really key parts of this journey to power our compute, and the fleet learning of these systems is going to be so critical.
Wayve CEO Alex Kendall, it's great to have you here on Bloomberg Technology. Keep us posted on your progress. Okay, coming up on the show, we're live in Sao Paulo at the B20 Summit and talking to Google Brazil CEO Fábio Coelho. That's next. This is Bloomberg Technology. Happening today in Sao Paulo, Brazil, the B20 Business Forum. Bloomberg's Germana Basecci is there live with a very special guest. Germana.
Thank you, Ed. Yeah, joining me right now is the Google Brazil president, Fábio Coelho. Great to have you with us.
Thank you, Germana.
Let me just start off by talking about the Brazil landscape as a whole. Brazil is probably the most advanced digital economy in all of Latin America. What circumstances have allowed for that to happen?
Well, first, it's a large market. We have 200+ million people. Second, it's a country that has suffered through inflation until the 90s, which drove a lot of the automation, and then the technology was employed to make sure that people would make the most out of their money, be that the financial sector or users. And third, because Brazilians are extremely entrepreneurs and they like technology. And we have a case with Google, Germana. Google has been around for 19 years, and our platforms have a very good relationship with Brazilians.
What role do you see specifically for Google in terms of driving the digital transformation right now in the country?
There are so many roles. One is to empower citizens. We have our platforms here are top 5 in the world for most of them. Brazilians have a love affair with technology and with Google platforms. YouTube, for example, is a success. Also, it's important that we're able to empower business to be able to become more efficient. Efficiency in an economy like the Brazilian one, which is an emerging market, is also pretty important. And we have now Brazilians very eager to adopt AI as the next wave of technology, and they're very optimistic about the use of AI.
Yeah, well, let me ask you about that, because on one hand, AI can increase efficiencies, increase productivity, but on the other hand, there are also concerns about privacy, about data protection. So how do you see the path forward for AI?
Well, I think it starts with the right principles. We need to be bold and at the same time responsible about the use of AI. Google has adhered to the ethical principles of AI utilization, which is important. And third, very important, is to have a dialogue around society to make sure that regulations are in place, but in a way that they are discussed with the society. We have The Brazil Marco Civil, which the Internet Framework Bill, it's now celebrating 10 years of existence. And that was a very good example of how to conduct a process to create regulations. We involve the society, we involve businesses, developers, politicians, and we get to the best model in such emerging technology.
Well, there was a high-profile case recently in Brazil of a tit for tat that went on between Elon Musk's X platform and the Brazilian regulator over concerns about dissemination of fake news and of hate speech. Specifically, what is Google doing to combat the proliferation of all of that, of hate speech, of disinformation, of fake news? What guardrails do you have in place?
I think the most important thing is, one, we have to respect the law, so we work, we fight and we remove anything that is related to hate crime, racism, violence, all types of crimes that we need to adhere to the law. That's a basic. Then we have platform rules, and then we invest in good content, quality content. We have partnerships in Brazil with more than 175 publishers, because good content needs to go up to be able to show that we educate consumers, to help consumers to get the best out of the platforms. Bad content needs to either be deprioritized, or in cases where we see reason and justice sees reason, we remove that.
Let me just ask you, at the group level, the Department of Justice in the US has launched an investigation into Alphabet's practices. There are concerns that one of the ramifications could be an eventual splitting up of the company due to practices that are put in place. What is your level of concern about that actually happening?
You know, Jumana, I'm not in a position to discuss the global rules. I'm responsible for Brazil. But I think Google has declared quite well. It has put in blog posts all the information about this.
Let me just ask you then, in Brazil specifically, do you think the regulator is getting the balance right between innovation and safeguarding consumers?
We have been very pleased with our relationship with regulators. We have been involved in dialogues. Every time we have the chance to discuss, we work together with the Supreme Court, with the Electoral Court, with the Senate, with the lower house, to make sure that we all understand and come to a common denominator. This is important because this is new, and we need to make sure that in a way we get the responsible approach, but we do not castrate the ecosystem of innovation and development, which is so important in Brazil. Let me finish that by saying we have Google has helped with a campus that we have in São Paulo for the last 8 years. We have accelerated 450 companies here. So it means that there is a very entrepreneurial group in Brazil, and we want to make sure it stays that way.
Great. That's a good place to leave it. Pablo Coelho, the Google president over here in Brazil. Ed, I'll toss it back to you.
Bloomberg's Jumana Becerra in Sao Paulo with Fábio Coelho, the president of Google Brazil. Thanks to you both. OK, check out LiveGo to get more from B20. Coming up, Ambassador Catherine Tai in conversation with Bloomberg's Stephanie Flanders. That's one that you do not want to miss coming out of B20. Wow, jam-packed show. That does it for this edition of Bloomberg Technology. You know where to recap the show on the podcast, of course. You know where to find it on the terminal, on the Bloomberg platforms, but also online at Apple, Spotify, and iHeart. From San Francisco, and thanks to the team in New York, this is Bloomberg Technology.